Hey everyone, John and Ray here, Slingshot Futures Trading Group, SSFTG. Welcome to the video. In this one, we're going to be discussing the differences between tick charts and volume charts. On the left side there, I have the 250 tick chart. Whoops, hang on a second, let me get yellow. I've got the 250 tick chart, and then on the right side, I have the 250 volume chart, and you can see those down in the bottom too because my handwriting's awful. So what is the difference, right? How do these work? They look very close. Obviously they're trading tick for tick, but if we look internally, you will notice that some of these candles look different, and especially when you get really close, you'll notice that a lot of these candles look very different. So how do tick charts work? How do volume charts work? The way that they work, and the reason why they look slightly different, is because a tick chart is based on every incoming trade, right? So a tick, in this case, equals a trade. Now, this does not mean, right? So this does not equal size, right? This has nothing to do with size. So the tick size being a 200 tick bar, as an example, or a 250 tick chart, does not mean that 250 contracts will have had to have traded there. Obviously, 250 contracts at a minimum must have traded because there were 250 separate trades. But there could have been 1,000 contracts traded because each individual trade might have executed for a different size in terms of volume. And that probably shows you what the difference is immediately between the two. But a tick chart of 250 is showing you 250 executed trades. So if we go into the volume and you were to look at the volume down here, let's pop the volume up, you'll notice that the volume is variable. It's going up and down and up and down and up and down because some candles trade more, some candles trade less. Generally speaking, the volume is usually around the same. But there will be big spikes in volume, there will be, little valleys here and there, but the volume will be different. Now, let's take a look at volume. Obviously, volume, that doesn't matter in terms of how many trades have taken place. The amount of trades, totally irrelevant. The important part that they have going here is the volume. So if one trade traded 20 contracts, that's 20 volume. So if we take this volume indicator over here, you'll notice this is just a brick wall because each and every single one of these is 250 volume. So what this is measuring is the incoming volume versus the incoming trades. They both display, obviously, the same swing highs and lows because they're the exact same market, but they will show you different calculations on the candles. And sometimes I personally find tick charts to be more valuable because you can see those spikes in volume where you wouldn't otherwise be able to see it in the volume chart. Instead, you would have a larger than normal candle because, well, likely it covered a lot of distance. That doesn't help a lot. Having a volume indicator that shows you peaks and troughs and all that fun stuff is a lot more useful, and that's why I find tick charts to be the better alternative, and that's why I use them personally. But that's going to be the difference between tick charts and volume charts. They both display, obviously, the same market, but they display it in just a little bit of a different way. Hopefully you found that useful, interesting, and maybe something to kind of fill you in if you were ever confused about why they work the way they work. But if you have any questions, feel free to drop those in the comments below. Or if you have a more detailed question, you can always shoot me an email at jhb@ssftg.com. I hope you have a great one, and until the next one, we'll see you all then. Thanks.